Hello, everybody, and welcome back to another episode of the Daily Crypto News. And my question of today is, are you bullish or bearish on crypto? And if you've answered that question already, when do you think we'll see another bull run? In 2020? 2021? Let me know in the comment section down below, and let's get on with the video. So, Bitcoin price pumps to 94.50 as the Fed announcement makes stocks surge higher. Thanks, Jerome Powell. The Bitcoin price pump, together with U.S. stocks on the Fed's decision to purchase individual corporate bonds. All right, a lot of people have been talking about this today, stating that Jerome Powell has saved the day and saved the stock market a little bit, and possibly even saved the whole American economy with just a little bit of a move. The Bitcoin price has experienced a swift recovery along with the U.S. stock market after the Fed made an announcement about buying individual corporate bonds on top of ETFs. June 15th promised to be another spectacular day for the bears. After an unconvincing comeback on Friday, the bulls were in for another sell-off that could match the scope of the Thursday sell-off. The Dow future set more than 900 points on Sunday, which meant that another 4-digit loss could be possible for the benchmark equities market indicator. Bitcoin traders didn't hesitate to take a cue from stock traders, pushing the price to the flagship crypto to $8,900, its lowest level since May earlier today. However, the Fed's determination to support the market, which a revised bond purchase program was enough for a huge market turnaround. Pretty damn good. However, the bulls have to work harder to actually reclaim the 95.50 level and to actually continue this push to 10K. However, as I've said before, we're in a very uncertain time with a huge amount of variables, which could still make it get to 10K. So how much you need in terms of Bitcoin to be within the richest 1% of the Bitcoin holders. Now, a fun fact, I often talk about what it would take for you to become a top 1% holder of Bitcoin, sometimes even XRP or Ethereum. And after covering it a couple of times, I noticed a lot of you guys don't really care about becoming a top 1% holder. And you shouldn't, right? Because when are you considered a whale? That's a different question entirely. It doesn't really have anything to do with being the top 1% to be a whale, right? Maybe in terms of that currency, but generally speaking, a whale is, a certain amount of money that we're talking about. I guess I can see a couple of exceptions. For example, if there's 100 coins of a certain token in existence and you have 98 of them, you would be considered a whale of that coin. But in general terms, if every coin is worth $1, right, you would still not be considered a whale in the markets if it were a crypto then, because, you would not really make a difference on Bitcoin altogether. But for that coin, you could be a specific whale. However, all of that I noted that it's more so about how are we going to accumulate coins, when are we going to be accumulating coins, and more surrounding that, and when are you a whale? When do you have significant impact in the market? Those questions really do matter a little bit more than when are you the top 1%. Because basically, what I noticed is that the 0.01% top, with about half or maybe even 70% of the funds, is exchanges and big players. So whatever we're gonna do, it's just like the traditional markets, where even if you're high up, you're actually not that high up to think about it. You're like, even if you're a top 1% holder of XRP, which is definitely possible for yourself to do, doesn't necessarily mean you have any influence, any money, or anything at all. It's just kind of a nice benchmark for yourself to have of, hey, I'm the top 1% of the people who believe possibly, or people who have money to support this newer cause of the payment revolution, or something that we often like to speculate about. However, again, don't take it too harshly, as being a top 1%er doesn't really do that much. It just kind of shows and asserts your position. Vitalik says Bitcoin S2F model is wrong. So we've talked about this often on the channel, about Vitalik Buterin's strange and really heavy opinions on certain crypto. The co-creator of Ethereum disagrees with Bitcoin's popular price predicting scarcity model. Let's just quickly go over the key takeaways. The stock-to-flow S2F model uses scarcity to predict Bitcoin's price, assuming that its price will rise with each halving. Ethereum co-founder Vitalik said he disagrees with the theory. In his words, the theory is set up in a way where it is impossible to disprove. So, the halvings cause Bitcoin price rises theory is unfalsifiable. Was the peak before the halving? Then it rose in anticipation of the halving. During, because of the halving. After, because of. The last 20K peak was nearly the halfway point between the 2016 and 2020 halvings. Basically here, they're saying, or at least Vitalik here is saying, you're kind of putting up an explanation for it all, but they're all positive, right? And it's impossible to disprove because you always have something to say. And in this case, again, I think it's really logical, his explanation. But he says, was the peak before the halving? Well, if the price rises before the halving, it would mean, it's all in anticipation of the halving that's coming. So people are buying, buying the rumor, selling the news, something like that more so, or at least buying the rumor. During, well, then of course it's because of the halving. The price rises while the halving is going on, or really the days before and after. It means that it's because of the halving. If it happens afterwards, they're going to most likely be saying it's because of the halving that the price now has risen or anything like that. So basically, there's nothing for you to say if it rises any of these three parts before, during, or after the halving, right? Even if it's 2 years later or even whatever, they say that this has to do something with the halvings. Some say it doesn't, and it's hard to know because, I don't really know exactly what to say there. It's just hard to know exactly what causes it. Price analysis 615, Bitcoin, and a lot of other coins. Just wanted to state again that these articles might help you out if you're trying to get yourself a general overview of what these coins are doing individually. However, later today, I'll upload another video on XRP specific, maybe a little bit of Bitcoin as well, talking more so about the prices and what I'm doing with the buying and whatnot, because, well, there's a couple of things I've been thinking about, and all these prices, they matter, but they also don't. And again, more on that I'll be posting in my video that's going to be coming up 2 hours or so after this one. RippleNet Cloud reaches new milestone, signs first bank customer. Banco Rendimento signs on to use Ripple's global payments network in the cloud. Sao Paulo, Brazil. Ripple, a leading provider of enterprise blockchain solutions for payments, announced Banco Rendimento has launched with RippleNet Cloud. As the first bank to use Ripple technology entirely in the cloud, Banco Rendimento joins nearly 24 financial institutions already running on RippleNet Cloud. So basically, I believe that this one is, again, as I said here, the first bank to use solely the cloud, right? That's at least what I'm fetching from this part. With RippleNet Cloud, banks and financial institutions can maximize their business benefits with faster speeds of innovation and time to market, while lowering total costs of ownership. RippleNet Cloud allows the ability to send and receive payments between financial institutions on RippleNet. Ripple's global blockchain payment network with one easy integration, meaning less friction and more standardization as companies scale. Financial institutions can also enjoy an easier connection to RippleNet, more flexibility and access to new features, and as a result of using RippleNet Cloud, to date, approximately 30% of RippleNet transaction volume flows through the cloud, an increase of 100% since the start of the year. And I'm actually assuming that this is going to be huge within a little bit here. But Banco Rendimento, which joined RippleNet in 2019, is a pioneer in the international payment space, committed to providing high-quality payment services and fair costs to help further grow the payments ecosystem. As the top volume-producing bank in Brazil, Banco Rendimento expects to increase payments volumes by Q1 2021 using RippleNet Cloud, and Banco Rendimento is now able to provide customers with more visibility, transparency, and standardization on their balances. And that part is actually the most important out of most of this just now, because that's basically why Ripple is such a huge player, basically, or such a game changer. It adds a lot of transparency to the whole very eerie, very dark, very shadowy business of remittance and just general payments, international payments, that is, because you just don't really know what's going on. It's always relying on another party, and it's always like uncertain. Ripple's getting rid of all of that, while also reducing its reliance on manual back-up office processes, such as reconciliation checks, and already Banco de Alimento is benefiting from a lower total cost of ownership, a key benefit of the cloud. We first announced plans to grow RippleNet ecosystem in Brazil a year ago, and with Banco de Alimento migrating to RippleNet Cloud, we're excited to see our footprint in the region continue to grow, says Luis Antonio Sacco, Managing Director, Latin America at Ripple. Brazil continues to lead in fintech innovation and is well positioned to forge the path for the rest of Latin America to follow. Ripple already has nearly 24 financial institutions on RippleNet Cloud, including Azimo, iRemit, MoneyMatch, Ucent/Pontual, Via Americas, and, yes, MoneyGram. And that's actually something I did not know, at least did not officially know, that MoneyGram was already over on the cloud. I had not read anything about them having been introduced to cloud at all, and that was one of the first times I actually noticed and saw it. And basically, a lot of people were asking me before, did MoneyGram stop the partnership? Did MoneyGram quit or anything like that? But no, that's not the case, and they're still running on the cloud apparently as well. That's it for this part. Grayscale is not buying record Bitcoin. It is just ripping off retail investors. Yeah, something you need to know. Retail investors are getting ripped off. Since the halving, Grayscale has been gobbling up 50% more Bitcoin than has been created. The news excited the crypto market, given that Bitcoin supply in the market has already cut down, and with Grayscale consuming all the Bitcoin that's being created in the market and more, this should drive the prices up. But really, that's not the case. According to Ryan Watkins of Masari Crypto, Grayscale actually bought way less, just 31% of all new Bitcoin being mined since the halving. This is because of the in-kind purchases. 80% of the money it reportedly pulls in do not make up for any buy pressure because they were in-kind purchases. Basically, these institutional investors can hand out their own Bitcoin in order to buy the GBTC shares. GBTC shares are available to accredited investors and are created using cash or crypto with a year lockup period to be reduced to 6 months, which means initial investors can sell their shares to public or secondary markets after the period is over. Watkins explains, when there are a lot of buyers and a few sellers, investors in the secondary market can push the price of the shares well above the value of the underlying crypto. Since no new shares are being created, no new crypto is actually going into the trust, creating a premium to the underlying. This can create a significant arbitrage opportunity for accredited investors who can create new shares in the primary market. 21 Shares, previously known as Amun, also shares in its report that buying Bitcoin at these premiums makes no sense if one is an institutional investor and creates shares at NAV, but retail investors are simply getting ripped off. Given these high premiums on products, it is unlikely that savvy or institutional investors are buying them. It's the retail investors that are buying GBTC shares to get exposure to Bitcoin through their brokerage accounts or 401ks. Basically, a lot of unknown people are trying to buy Bitcoin and they're getting ripped off majorly. It's the institutional and accredited investors that create GBTC are able to resell at large markups, and of course, Grayscale is benefiting from retail overpaying, said Laura Icha of 21 Shares. Bitcoin Leon Cooperman believes Robinhood traders will end up in tears. So yes, American billionaire Leon Cooperman has a dire warning for Robinhood traders. During his recent appearance on CNBC, American billionaire investor Leon Cooperman opined that retail investors who use the high-flying Robinhood app could end up in tears. They are just doing stupid things, in my opinion, and they will end up in tears. Well, to make a long story short, you're all speculating, and you're all just most likely going to cut yourself in the fingers by trying to beat the market. And most likely, you will lose money and end up in tears. That's basically what he stated, and he has a very good point. Most people don't know what they're trading, and they're just kind of playing the game, and that might hurt a lot of people. Ethereum's Vitalik Buterin thinks it may take another 2 years before Bitcoin peaks. And by the way, guys, if you are enjoying these daily crypto videos, please support the channel by pressing the like button and subscribing, because it really does help me out. And and also really puts a smile on my face. And I believe 65% of the people are not subscribed. You can make an end to all of that by just clicking. So yeah, do it. All right, so again, long story short, a little bit of what we said earlier here. Vitalik just kind of wants to point again at the. It's not really his point, but it's what we can kind of fetch from his sayings here. He actually disproves the S2F model. Well, he doesn't actually disprove it. He tries to claim that it is not disprovable, and thus it kind of does not make sense. However, you can fetch from his story that he says here there was 2 years between the 2016 halving and 2020 halving, and since the 2020 halving just happened now, it most likely will take another 2 years before we get to another bull run. All right, that's actually the whole story summed up in just a teeny little weeny bit. However, if you wanted to know, Plan B, the originator of stock to flow in the crypto world, had earlier predicted that Bitcoin price will skyrocket to about $288,000 by 2024. So again, these are no joke numbers, all right? We're talking about some really big freaking money. The Bitcoin dominance rate finally breaks out. All right. The Bitcoin dominance rate has broken out from a long-term descending resistance line. It is facing resistance at 66.5 and 68%, and BTCD is following a long-term ascending support line. That's all you need to know. I actually checked the Bitcoin dominance here, and it's not really done much, and thus, I kind of wanted to check the article out, and then I was like, meh, because they're kind of on a wild goose chase here by claiming that we haven't moving up at all. So I don't know too much about that, where that came from, or why they thought such a thing. And here's also something that, again, I want to ask you guys about. Do you guys want to hear more about these very, very elaborate riddles that have to do with bricks and gold and possibly Trump and the government or anti-government, and then talking about a new payment revolution or the golden standard, or possibly China versus Russia or things like that? If you do, you really need to let me know, because again, if none of you guys are telling me, then how can I know, right? And yes, some theories sound quite legit, some sound rather stupid, but still, I believe there's a lot of demand for it. But you guys just need to comment it down below if you want to know about it. And again, just to quickly get back to this point right here, please guys, if you don't know what you're doing in terms of trading, learn a little bit more before you start to do it, or work with a couple of dollars. All right, putting the laptop back down. I was getting excited. Just try to trade with a small account of, let's say, for example, $50, $100, maybe $500, depending on how much money you have. Just start small to make sure you don't gamble away or speculate away your life savings or thousands of dollars, right? And maybe $100 is already a huge amount to you. Then maybe start with a penny account, or at least, for example, a $10 account, and you start to work with some small pennies. You'll find a website that works for that type of stuff, or maybe just use a demo account. Take note that demo accounts do not replicate what happens in real life most of the time. However, it might give you a general idea of how things work, right? Keep in mind, it doesn't replicate it because of one very big fact, that is your psychology. Trading is one part knowing what to do, and second part just pure psychology. You need to be mentally able to put trades in and leave them on for the right amount of time. And even though you might know what's correct to do, your mind might not allow you to do it. A little small real life example of what I have done in the past. It is, I've placed the most amazing entry ever. So I bought Bitcoin or whatever coin at a very pristine spot. All right, I planned it a couple weeks ahead already. I knew exactly what I wanted, and I bought it. Just slightly afterwards, everything turned to mierda. Just turned to a very, very bad situation. So I was now left with two choices. Either I was going to chicken out because I had looked at it, I was like, meh, and stray away from my original idea and tactic because I had stop loss and take profits in place. I would then stray away from my tactic because everything started to look a little bit more dire and kind of sad. Or I was going to leave the initial strategy, which I had already planned for weeks. If I had thought with my I don't even know with what. If I just thought clearly, without psychology, without mental stress, and if it wasn't my own money, I would have most likely left it there because that's the right thing to do, because it follows strategy and it will most likely work out. Even if it didn't work out, statistically speaking, you would still benefit from it. However, I didn't. I didn't. I let my mind take over, took off the trade, and boy, did I regret that, because that would have been one of the best trades of my life. So yeah, that's a little bit of a real world story to all of you to, again, work on that psychology. Make sure you always have the right mindset to trade. Don't trade in a rush because you need to earn some money back or you want to earn some money quickly. Do it because you really know what you're doing. And again, keep that psychology in check. Maybe look up a little course or a little, not a course, don't buy that, but look up a little YouTube video on trader psychology or something like that. And again, don't go buy a course, but just look up some mental training or something like that. Or watch my Dusty Finance channel. It's also a possibility. Guys, I'm also thinking about changing the Dusty Finance channel to a different name. Maybe like money investing or something like that. Just something that doesn't involve Dusty in the name and, resolves more around money. But you guys just let me know about that as well. Thank you all for watching. See you guys again in another crypto video. Take care, everybody.